2025, what a year it's been. And for each of these firms, respectively, Coinbase, FalconX, CM Group, and Hidden Road, big years for all of you. And we're going to dive into a little bit more about what we're seeing in the industry and where things are moving forward. Usman, I would love to start with you because looking back 5 years ago, the term institutional was maybe kind of slightly adventurous asset managers. And that was kind of the extent of what we saw as institutional demand in crypto. But now we've got sovereign wealth funds. The demand is just expanding beyond most of our imaginations. How are the strategies in Coinbase at the moment? And can you share a little bit more about the narratives in 2025?
Yeah, so a few years ago, like you said, it was always a side project of a niche team to venture into crypto. They started off with basis trading, which is what they understood in TradFi. We've come a long way. As you said, we've got sovereign wealth funds, corporates, governments, asset managers. They've all ventured in their own way into crypto. And the sequence of events in my head has always been like they started off with basis, which they understood. Then the macro funds started thinking, hold on, there's a deep pool of liquidity here that I can access outside of traditional market hours. And then they started using crypto as a release valve for geopolitical macro events over the weekends. That created a bit of a FOMO with asset managers where they're like, they have to be involved in order to stay competitive. That deepened liquidity further and also grew demand for stable coins, which are the backbone of everything that happens on crypto. Then the asset managers, corporates started seeing this growth in stable coins and started saying, actually, this is a great way to efficiently manage my treasury. And they started doing, whether it be internal treasury management or accepting payments with blockchain. And that's suddenly evolved to, all corporates doing that, accepting payments, cross-border payments. And then now we get asset managers that are looking at doing further yield enhancement and are also going into DeFi and, doing liquidity provisioning, lending, the whole works. So completely different position to be in than 5 years ago.
Completely different landscape, and the opportunities are endless. You've mentioned stablecoins there and just the opportunities that they bring to our industry. And Joshua, I'd love to turn to you now because you've also referenced that USDE and other stablecoins are this native internet money. And we're seeing stablecoins move beyond what we see as just settlement into collateral and different settlement tools, but also, as you've mentioned, DeFi narratives too. So what kind of client behaviors are you seeing specifically within stablecoins at the moment?
Yeah, absolutely. Stablecoins are maybe just one of a broader category of yield-bearing assets that investors can hold on-chain and can put to much more productive use than just holding cash in a bank account, right? I think we live in a world where as interest rates have come down, people are looking for higher sources of yield, even going further on the risk spectrum. And in particular, in the world that most of us operate in, as counterparties, trading counterparties to hedge funds and venture firms and asset managers, they're all looking to trade on bilaterally, like with a dealer like us, FalconX, and use these assets on chain as collateral, as you mentioned. Generally speaking, historically, like looking back 5 years ago, the most common assets were just things like Bitcoin, ETH, USDT, USDC, generally assets that don't carry any interest. And it was very capitally inefficient for people to hold these assets without accruing like the natural yield, maybe in the protocol yield embedded in the asset, or for dollars getting that interest rate that comes from, even just from T-bills, right? So what we're seeing more and more are people using things like USDE, which carries a yield from the basis trade, really from all of the leverage speculators in crypto who are, using perps for leverage effectively. And that's kind of where the yield comes from, or even just the more traditional kind of T-bills backed stable coins. And they're posting that to dealers like us. There's numerous advantages, one of which is the capital efficiency and the yield, but another is just being able to settle margin calls over weekends, right? That's something that in TradFi has been a difficult, proposition for, settlement networks and prime brokers and, all the kind of existing infrastructure to deal with. And so it's unlocking like a lot of new opportunities. And one more area I'll just mention briefly is Athena kind of with USDE opened up a door for other actively managed, delta neutral type strategies. Not all of them can properly be called stablecoins, but they're certainly kind of dollar pegged or kind of stable value type strategies that are mostly generating yield on chain and packaged in a tokenized format that can be used and carried portably across different strategies or as collateral anywhere, really, on chain and off.
Fantastic, thank you. And Giovanni, I'm curious to hear from you now, because I think we can all agree CME Group has been really central in legitimizing crypto and the digital asset space and the crypto markets. Interestingly enough, you're now moving into Solana XRP futures as well. So I'm curious to hear, when it comes to institutional clients, what kind of demand are you seeing, and what kind of trends and signals that we're really ready to move away from just Bitcoin and Ethereum futures for the institutional market?
Oh, thank you for that question, Jessica. And I think, firstly, it's really the undeniable success that we've seen with our regulated cash-settled Bitcoin and Ether futures, which have grown to trade now over $13 billion per day. That really indicated to us that there's growing demand for other cryptocurrencies beyond, or futures on other cryptocurrencies beyond, say, Bitcoin and Ether. We also saw a very strong client demand with Solana actually being the most requested product beyond, say, Bitcoin and Ether. So really indicating that clients were looking for diversification beyond those two main coins. And I think when you look at the market cap of Bitcoin, Ether, XRP, and Solana consistently rank behind Bitcoin and Ether, so indicating that there's robust liquidity there. And I guess lastly, really greater, say, regulatory guidelines giving us that comfort to launch these additional products. And the launch has been tremendously successful. In fact, the launch of our Solana and XRP futures have been the fastest growing products for the exchange. We since Solana launched on March this year and XRP in May, we've traded more than $50 billion across the suite. We've also seen tremendous growth in terms of open interest, with XRP actually hitting the 1 billion mark in just about 30 days, right? It took Bitcoin 3 years to achieve that feat. And not to be undone, Solana crossed 1 billion mark in open interest the same day that XRP did, but it quickly went to double in open interest in just 18 days. Took Bitcoin a little bit over a month to do that. And Ether, which is a little bit more akin to Solana, took 3 years to achieve that feat. So we're really seeing institutions looking, say, for the deep liquidity, the trust of a regulated exchange brings.
Great, thank you. And Joshua, now over to you, because 2025 has been a huge year for Hidden Road. So I'm curious to hear from you now, when it comes to what we're seeing with new forms of collateral emerging for different clients across the institutional board. What kind of trends are you specifically seeing? And also, how is your role with clients changing?
Sure. I'll piggyback a little bit off what Josh said, because he covered a number of the new popular forms of collateral, but I'll try to do it through the lens of a prime broker. And so there's a number of factors that you need to consider when accepting collateral. The first one being, do you understand the collateral and the liquidity profile to that? And do you stress that? And if you needed to default it, how do you get your dollars back? So it's a very important first side of it. The second side of it is really more around how counterparties post the collateral to you. There's generally two options to that. First is under title transfer, where they'll post those assets that sit on your balance sheet. The second is, and institutions will want this and already are demanding it, is to post those assets in tri-party. And so meaning they hold those assets away. And so you need to understand the account control agreement, how you get access under certain situations. So that's just like general type of collateral. In terms of like what collateral we're getting, a lot of people still want to trade the Bitcoin basis trade. Bitcoin is a non-carry asset. And so being able to post that as good collateral and have somebody like Hidden Road finance dollars to perhaps run a Bitcoin basis trade, where I think we're still the only FCM that takes Bitcoin and will finance dollars to cover span margining. In that setup, you need to understand not only and model the basis risk, but understand what that Bitcoin as collateral is. Playing on that, it's XRP, it's Solana. Moreover, you're starting to see that in securities. Everybody's been buying ETFs, and now you have security law interest introduced, but they're long ETFs, short front month CME future. Again, the liquidity side is really important. Josh briefly mentioned it, but I think it's really important that as large institutions come into this space, the quantums of collateral that they pose will dwarf where we are now. It is critical that you have assets that pay positive carry for that, and those need to be digital. And so this is certainly, tokenized money market funds, the early stages of, BlackRock and, VBill. There's a number of those, a number of more of the yield-bearing stable coins. Guy and Athena, Ondo Finance, like the list goes on. There's several. Each one of those have different liquidity profile lockup periods that you need to properly understand. So thematically, from a prime perspective, these types of assets that you can tokenize value and ship those around 24/7 changes the risk management. So from my standpoint, it shrinks what we call our MPOR, which is your margin period of risk. Clients can meet collateral calls more efficiently. And so that just naturally makes markets more efficient. I'd end with this of kind of where we are. It's still early on, but last week, CFTC Commissioner Pham came out and formally announced tokenized collateral in the stablecoin initiative. That, to me, is the first step for regulated markets to start to move 24/7, where you can have collateral. Again, early on, but exciting developments.
Certainly. And now we're going to answer first question. I think everyone in the audience will agree when looking at the crypto markets, it's follow the money, follow where the institutions are moving. And institutional inflows, undeniably, we've seen 2025 has been a very significant year. So I'm curious to ask all of you, when it comes to institutional inflows that we are seeing, deeper liquidity into the markets, are we going to see capital rotations flow through this, or is this a risk that we're seeing concentrated activity within the crypto asset classes? Usman, maybe we can start with you here.
Sure. I think a year or two ago, there was concern that with the launch of ETFs, we're going to have bifurcated liquidity, where as IBIT and other providers grow, those assets stay in TradFi and can't flow down into crypto. I think we've seen some of that shift, and DATs have really helped, where the managers of the DATs essentially have to do something with the assets that they purchase. And that activity is flowing down into the crypto economy, whether it be via DeFi, lending, or going further down the stack of crypto assets. So I think we're definitely going to see some spillover. I think we already have. I just think that it's going to be a multi-step process. But ultimately, as Mike and Josh and Giovanni have said, that once we unlock institutional capital, I think we don't really fathom just how big the institutional capital is, or the TradFi capital coming into crypto.
Absolutely. Josh, I think.
Yeah, I agree. I mean, I think we at FalconX have been pretty active in the digital asset treasury trade, both as an investor and as a facilitator, execution partner, custody and staking partner for a lot of these treasuries. And I think it does mark like a very significant milestone for our asset class, that these assets that had previously been pretty dispersed across a lot of early adopters, high net worth people, retail holders, are now being reconcentrated and sort of accessible to a lot of the folks in the institutional category like us, in these sort of vehicles that are professionally managed. So it does really change like the character of the industry and how these assets are getting deployed. For us, it's important because we're then now talking to investors, professional investors that are very familiar with derivative strategies, generating yield. They can properly assess the risk reward of deploying assets into a protocol, for instance. You have very savvy investors like Kyle Samani and the Solana DAT, who has already come out and said that they're going to deploy a lot of the Solana assets in yield-bearing strategies on chain in the Solana ecosystem. So it's a huge milestone, and it really will drive a lot of value creation for protocols on chain that are specifically built to serve that professional investor category. So if they're maybe we kind of hate to see this in the crypto native world, but probably things like permissioned and KYC things, things that are a little bit less levered, a little bit less degen, but maybe more regulated in a way, will probably gain a lot of traction. And those are really like the protocols that we're investing into as a firm. Strategically, we think there's going to be a lot of growth in TVL in those types of things that cater towards treasury and CFO type personas.
Yeah, and I think when you look, say, at what institutions bring, right, we're seeing sort of like a deepening of that liquidity, right? If you look at just how the evolution of, when we first launched Bitcoin futures in December 2017, who the personas were then, right? It was your traditional liquidity providers. We started attracting some of the crypto natives, some of the crypto focused funds, but to the point that some of my fellow panelists made, that basis trade was something that was being traded, but it was limited, right? So it was those funds that had access to, say, the spot markets that were putting on that trade. But it really wasn't until the introduction of the spot ETFs last year where we now started seeing additional market participants come into the space. So now you started seeing some more of the traditional hedge funds enter the space, and a lot of those hedge funds entered to put on that basis trade. But as the year went on, we started seeing hedge funds now taking a more tactical approach and more directional plays as well, which has been something that a trend that I think will continue. So we do see as more of these participants come in, you see greater volume, you see deeper open interest, and it really just all builds where you start seeing momentum and greater numbers overall.
Best for last, I guess. Yeah, I think it has a lot to do with what my colleague said, right? Is the type of products, and so that's have been clear. But in terms of concentration risk, there's about 100 billion in those. 93 billion of it is in Bitcoin, just shy of 7 billion ETH, and there's a tail of up to 10. So you're still absolutely seeing concentration there. But in the Bitcoin and ETH world, where you're starting to see very large options market, like the IBIT options when it first started was 73,000 contracts traded in the first 60 minutes. It's now bigger than some of the larger crypto native options venue in a very short amount of time. So I think as why options are important, it dampens the downside risk, and that institutions can come into those. But staying a little bit on the crypto native side of institutions coming in, because you're now getting proper certainty and clarity from the regulators. And so you can book it in the US and pay taxes. FASB came out and codified. These things are all moving in that direction. And so what I see from our side is a little bit from a trading standpoint is like the large statistical ARB guys that were pretty famous in small cap, mid cap equities, applying similar strategies and techniques into digital assets, and they're trading across a surface of coins that's 150 to 200 names and getting sufficient liquidity off. And so I think that's the growing market. Not everybody's delta neutral, they're stat arb-ish. And so for us, that's an exciting development, and I think those types of institutions can deploy material capital. As for new coins coming up without a perk market, super limited. So exciting times, but still heavy concentration in the main products.
Maybe just to add a little bit to that, right? Because you're absolutely right. I think when you see the growth in the markets, right, it is allowing, say, for some of those more sophisticated strategies, some tried and tested protocols, for example, that have been deployed across other asset classes, and we're beginning to see that. We're also beginning to see interest, and to your point, Mike, on options where institutions have really been a little bit slow to adapt options, but we are beginning to see that change. In fact, just this month, we crossed 7 billion in terms of open interest across our Bitcoin and Ether options products, and we're beginning to see greater volume as well, an indication that now institutions are moving beyond just futures, also now moving into more sophisticated strategies involving options. And incidentally, we have options on Solana and XRP going live October 13th as we continue to see growth for those products.
Certainly very exciting.
I was just going to say, I think it's worth touching upon regulation,
yeah,
and how regulators have provided a lot more clarity in the last, feels like a few years, but actually only been a few months, right? And as that increases, and as the clarity increases, the US is obviously leading charge of this with Genius Act, and then the rest of the world, the UK, Singapore, etc., are joining forces. But then you're going to start seeing traditional money managers able to access more assets than just what's on the regulated exchanges. They can go down further down the list. At the moment, a lot of them have to leverage whatever they can trade and clear in their current prime broker or TradFi broker at Goldman's, JP, etc. But once like crypto is not a swear word in your mandate, they can start trading a lot more. So I actually think with the increased clarity led by the US and followed through by the rest of the world, I think we're going to start seeing a lot more activity outside of the majors.
Very good point, actually, to touch on that. So as you mentioned, the Genius Act in the US, and you've mentioned Singapore too, but is there any other areas that present challenges and also opportunities for the industry?
I'm happy to jump in.
Please do.
Yeah, I mean, in the US, it's incredible for folks that come from that market to see the SEC and the CFTC collaborate. That's unprecedented and pretty exciting. Obviously, the Genius Act is a major step forward. Commissioner Pham from the CFTC on this tokenized collateral is very, very important. But I think you're going to start to see equivalents as well. So you have the US and the UK, like you get in traditional markets where the regulatory standards are set the same. And so now on a global basis, that's going to be very important for this. I just spent a week prior to being here in East Asia. And so if you go to Korea, the FSC there has a 4-phase, very descriptive rollout plan. It's likely Samsung and Murray will get the ETFs, and you'll start to see these institutional products. I was in Tokyo, and if you look historically, when the JFSA changes anything on the leverage side, which is happening in derivatives, the market's elastic. Like the small change will drive very large volumes. And so globally, regulation, clarity are coming together, but there's different pockets that are still creating this fragmentation. And I think that equivalence piece will really be one of the final steps to broaden the institutional adoption.
And the Genius Act has been mentioned a couple of times, right? And I think what's been really interesting is when you consider that act, and it's about putting guidelines for stable coins, but we've seen like tremendous growth in terms of our Ether futures volume as well as Solana futures volume, as those platforms are primarily used to mint stable coins. And just to put that in perspective, if we look at how much Ether has traded relative to Bitcoin in terms of notional volumes, from January to July, it was probably about 25% or so. In August, Ether represented about 80% of Bitcoin volumes, and there were a handful of days where Ether actually outperformed. And I think that's really a direct result of some of this regulatory clarity that we're seeing, and we're also seeing in growth as well in these new contracts that we launched recently.
Yeah, I'd say so. My firm FalconX, we've always operated under the CFTC as a swap dealer, and I think the fact that there is a lot more clarity on how to get to a regulated status in the US has really expanded the playing field for a lot of players. That's obviously a positive thing for startups coming into the space who want to challenge incumbents, but it's also, I guess the flip side of that is if there is a clear path, a lot of people who are operating kind of on the fringes and gray areas do need to come out and register and participate in the regulatory process. So, it's a trade-off. Like the whole industry is becoming much more, suit and tie type of place to work. And, I think a lot of us came from TradFi and we're just acclimating to being back in TradFi effectively, even though we all work at crypto companies. So that's one thing. I think the other thing that's kind of interesting is there's a lot of spillover effects into DeFi world, right? So if you think about the growth of Hyperliquid, even though it's not directly touched on in maybe like the Genius Act or any of the kind of regulatory frameworks thus far, the reason that there is so much volume there, I think, is because regulated firms in the US, prop trading firms, high frequency trading shops are emboldened to basically participate in these venues. It's easier to get through risk and compliance committees to deploy on this, given the just favorable backdrop generally, and the fact that like it's less likely for you to get prosecuted down the line for participating in these things because there's a more kind of forward-thinking approach to innovative platforms.
I just think that what Mike said is super important here. I think the biggest challenge that we have globally is harmonization, right? As soon as we get harmonization, then I think we'll see a huge exponential increase in activity. I mean, Coinbase has started with trying to do this joint task force with the UK and the US, but it's a long way to go globally.
Can I just keep on that theme? It's less regulatory, but it's, like the post-trade side of things is really important for standardization, and we're just not there as an industry, and we need to focus on this. And what I mean by that is, the post-trade blockchains those platforms need to integrate with TradFi Finance to get these efficiencies. And you literally don't have those things. And what's happening is because tokenized finance is moving and outpacing these integrations, you're getting all this fragmentation. And so we need to come together globally to cooperate and coordinate better integrations, interoperability, operational and regulatory standards. And here's an example. I come from the foreign exchange markets. And so September 17th, I think it's very relevant, September 17th of this year, CLS settled $20 trillion that day. Due to their settlement cycle, which is multilateral, the funding obligations to settle 20 trillion was 100 billion. That's 0.5%. And so you have blockchain that can move us from tenures like settlement in T2 to an instant, but you're not going to get that standardization. And so it's definitely somewhere improving that and working on the counterparty credit risk. But I think it's this global standardization, and maybe it's boring in the back office side, but that is critical for scale in this. And we need to do that now while regulations are coming out. Otherwise, institutions will struggle.
Yeah, very good point. And now if we look at moving ahead, so none of us have a crystal ball. I think if we did, we wouldn't be sitting on stage. We'd be retired on a beach somewhere. But if we look 2 years ahead to institutional adoption and institutions going mainstream, what do we see as a key milestone that's happened? Is it tokenization? Is it RWAs? Is it standardization? What kind of things would you see as being institutions mainstream across crypto?
Yeah, I can start. So I think the biggest trend of the next cycle will be things like tokenized equities, equity perp dexes, prediction markets, basically things tied to the real world on chain. I think it's sort of not just something that will benefit crypto broadly, but it's sort of existential for us as an industry to bring a lot of this risk exposure on chain, because we have seen a lot of capital leakage from crypto going back to equities and other asset classes, as sort of the risk premiums in crypto have compressed, right? The asset class has matured a lot. If you want really excess, returns in crypto, it's harder and harder to find. So bringing a lot of that risk back into crypto and allowing speculators to get access to them on chain and cross margin across all these different asset classes on chain is very important. And yeah, I think the other thing I would highlight is I think all of these things will drive achievements that all of us in the industry have tried to work on for decades, right? So one good example would be reducing the margins in equity financing, kind of stock loan type desks, right? Which exists in prime brokerages. It's a high margin business where you take some stock that someone wants to go short and you lend it to them at a high rate. And if you can imagine a world where tokenized stocks are collateral on Aave, let's say, right? And you can borrow those stocks and you can go short them, and it's very transparent what the margin is between a borrower and a lender. And you can see how much inventory there is at all times. That's something very powerful, and it will definitely compress margins in traditional finance, but it's kind of what we've all been working towards for many years, right, as an industry.
But I also think it's even somewhat simpler than that as well, right? Because I think it's also about having asset managers, for example, pension funds begin to allocate to the space, right? So greater allocation beyond just what we're seeing, for example, with DATs, right? It's the continued, say, expansion of derivatives, regulated derivatives in the space, and sort of that transfer of some of these traditional metrics that have worked in the past and being applied, say, to crypto. And ultimately, I guess the end goal is that a marriage sort of between, TradFi and some of these newer technologies, helping to improve, say, settlement times and movement of value long term, right?
Yeah, I agree with that. I think for me, success of the industry in a few years' time will be simply financial infrastructure is upgraded to be incorporated into blockchain, and I think that will solve pretty much everything that everyone's discussed here. Like, we'll have essentially a aggregate liquidity pool where you have TradFi assets, crypto assets seamlessly being traded amongst each other. You'll have faster settlement times, which results in capital efficiency. And I think that's the way I would deem success. Rather than just focusing on our asset class, crypto should be an equivalent asset class in an institutional manager's mandate.
Very good point.
Last but not least, again, I guess. Yeah, I mean, I agree with everybody said. I think tokenized equities is probably the biggest one, and being able to have digital transfer agents, because the problem is with that, right? Like, that's very important. You can't go on Aave and transfer the ownership to somebody who's not KYC'd. So what's coming out today is effectively, swaps on these things in tokenized format. So there's a long way to go from a regulatory and a securities law that's very clearly defined. But I give a non-crypto kind of thing, right? And there's no reason payroll is every, twice a week twice a month in the US. Twice a week would be great. Twice a week in the US and a month and once a month in the UK, right? And so wouldn't it be interesting? I know my platform pays people hourly on the top of the hour. And so if you move to a world where you can start paying people hourly or daily, what does that do? Right? Is that interesting? I mean, maybe it's dangerous. Well, actually, the mortgage that you're paying and the interest that you're accruing on that, you can start to crush down the debt side of these things. And so it's not a crypto comment, it's the technology side of these things. And there's obviously, lots of challenges in doing those things. Maybe ADP is probably going to be after me for saying that, but this is readily available. And I always joke around and say, like anything of value, and that's Ripple's big thing, you're in the internet of value, tokenizing things and shipping that around for good collateral and settlement and finality to trades. We're kind of here. And so is Mike Higgins buying a cappuccino at Starbucks on a Saturday and selling my NVIDIA shares. Now, I'm not sure I want to sell my NVIDIA shares for a cappuccino, but the point being, it's for settlement. It's on a Sunday, and you could do that. And so we're not far from this type of advancements, but there's a lot of consideration, and the regulators need to be very careful in doing this.
And it's always fantastic as well to hear examples of potential disruptions on specific use cases. Because I think here in crypto, we do get super focused on charts, number go up. But when you give reference to real world integrations and crypto as collateral and settlement basis, the opportunities are really endless. We do have 5 minutes left. So I'd like to kind of go around and everyone give one of their highlights for 2025 so far before we round up.
I'll start.
I would love you
We're
to start.
almost done with the Ripple acquisition. So Hidden Road, is a multi-asset prime clearing business, and funded it with pension fund money, and had to go prove the thesis out. And we took about $500 million and deployed that. And then the change of administration last year in November really, was positive for the crypto side of things. Ripple was a small investor in us, and a pretty organic conversation. And when you look at Ripple's, balance sheet and treasury, that immediately makes it one of the largest balance sheets, not just as a non-bank PB, but amongst tier 1 banks as well. And so, as Usman clearly classified, macro traders are trading equities, fixed income, foreign exchange, digital assets. There's correlation in all these things. And so being able to truly cross margin and margin finance that is super powerful. And so as we do fixed income today, 10-year on the run treasuries against CME, those will be repos on chain, right? And that world is coming together. And so we're excited to do that. We're one regulator away from approval, and off we go.
Congratulations.
Thank you.
Giovanni, over to you.
One regulator away from approval and off we go, bro. I don't even, what the fuck?
What's this man's relationship with Ripple?
He's a gentleman from Hidden Road. Hold on, give me a second. Let me look at his credentials real fast. He is Michael Higgins Internet. Oh, he's the fucking CEO.
Wow. Okay. I wasn't expecting that last part at all. That's why I was like, my ears started perking up. Man. All right.
This whole, so if for you, those of you guys listening, what's going on, everybody? Welcome to the Wealth 28 Club podcast, Friday call. I'm not gonna skip the intro because this video breakdown was freaking massive.
Yeah, super massive.
This is Token 2049 Singapore that took place just 2-3 days ago, from the 7th to the 9th, I believe, of October, if I'm not mistaken. So fresh. This video that you guys just listened to only has 36 views so far. So
that's it.
Yeah,
that's it.
I know, right? I know. Right?
Yeah, man. You would think the XRP army would be all over this too with the hidden road comments at the end of this. This is a hidden gem right here. Wow.
Shout out to the CyberX researchers for always bringing the juice before the mainstream gets it. Yeah, let's run it back. I think the first part of this call, before we dive into what we have to share today, I really want to just highlight and replay some of the clips that these gentlemen just said. I'll go over their credentials in a second. And then we'll carry over into this kind of ideology behind getting your mindset right for DeFi and to earn passive rewards on your digital assets, considering this most recent market downturn that we've seen. We're all currently living through over the past couple of consecutive trading days. Markets shed some weight. Why the market shed some weight? Were you prepared for that? Did you even know why the market shed some weight and why your portfolio today is most likely down? And just get everybody's mindset right as we head into the future. And then we have a Metallicus presentation, as always, bringing you guys some of the realest info in the game. So, yeah, do us a favor. Share this podcast. If you guys are on X, repost it. Let's get some more followers on in here and just get the minds right for this Friday before we head into the weekend. Aquaman, how are you, bro?
Man, I'm great. Had a wonderful workout this sunrise, so I'm feeling really, really good. You know how your endorphins hit you on certain days while you're working out? I'm feeling that today. So
yeah, I traded this morning, and then when we got off our quick phone call this rising to prep for today, I went and hit a little 30-minute workout, and it always just feels so great to just get the body moving, dude. I told you I started doing the box jumps, and it I added a couple more plates, and it just feels so good to be able to move my body like that in my 30s.
Yeah,
you know?
Facts, bro. Facts.
Most
Box
people
jump, go ahead.
No, I was just gonna say, most people I was looking at statistics, most people after the age of 30, bro, don't even sprint anymore.
Damn, that's wild. That's super wild. Yeah, I'm an athlete, bro. So, I be doing all that shit. So, and I'm 40.
I love it, man. I mean, health is wealth. Real wealth is health. And if you're not focused on your health, what's money really to you then?
Man.
You can't. Go ahead.
No, I was just gonna say I'm in this new routine where I just need to work out an hour a day. It's like a must for me to have a complete day now. It's it's embedded. You know what I mean? I stopped doing cardio. I'm just lifting, focusing on one muscle a day, just 1 hour. I feel like the 2-day off thing is kind of whack. I feel like I'll take a day off if I really need to. You know what I mean? But what's an hour a day? You know what I mean? So I'm really enjoying this new hour a day lifting, and I'm seeing results as well. So
yeah, I love having a home gym, man. It's so time efficient, and it makes me feel like, on the days where I'm like, I don't feel like it, I'm like, dude, you got a home gym, why not? What is your excuse? So
yeah, zero excuses, bro.
There's zero excuses. All right, so let's jump back into some of the clips from this video breakdown. The first one that I annotated was when he mentioned the pace and scale of institutional adoption and institutional interest in these more sophisticated onboarding packages for financial institutions to trade and invest in these digital assets. So he was talking about how XRP hit $1 billion of open interest in just 30 days from the launch, whereas Bitcoin took 3 years to achieve this status here. So I just want to run that back because, that's like an eye opener to all the people that are like, oh, these institutions aren't going to be interested in altcoins. They're only going to be interested in Bitcoin. No, that's 110% false and an outdated perspective. And then that's also going to nail right on the head, or hit the hammer right on the nail on what the gentleman talks about later on in the session, that once regulations are clear, these institutions are going to be able to broaden their access out of the top 10 digital assets. And they're already looking at up to 250 different crypto assets, which is huge if you've been in crypto for at least the last 3 years, because I know a lot of us have had this speculation oh, there's probably only going to be 10 assets that survive. Well, we're about to head into that future where we know what assets are going to survive more so as the market matures. And it's not going to be this speculative, oh my gosh, if I'm investing in a number 80 asset in the total market cap, it's going to get rug pulled. We're entering into that era. So let's run this back real fast. Let's go into this 6 minutes and 25 seconds. I wrote this down.
Bitcoin and Ether. We also saw a very strong client demand, with Solana actually being the most requested product beyond, say, Bitcoin and Ether. So really indicating that clients were looking for diversification beyond those two main coins. And I think when you look at the market cap of Bitcoin, Ether, XRP, and Solana consistently rank behind Bitcoin and Ether, so indicating that there's robust liquidity there. And I guess lastly, really greater, say, regulatory guidelines giving us that comfort to launch these additional products. And the launch has been tremendously successful. In fact, the launch of our Solana and XRP futures have been the fastest growing products for the exchange. We since Solana launched on March this year and XRP in May, we've traded more than $50 billion across the suite. We've also seen tremendous growth in terms of open interest, with XRP actually hitting the 1 billion mark in just about 30 days, right? It took Bitcoin 3 years to achieve that feat. And not to be undone, Solana crossed 1 billion mark in open interest the same day that XRP did, but it quickly went to double in open interest in just 18 days. It took Bitcoin a little bit over a month to do that. And Ether, which is a little bit more akin to Solana, took 3 years to achieve that feat. So we're really seeing
right. So, that's pretty crazy to me. I mean, Solana and XRP doing numbers that Bitcoin and ETH did took in 3 years. Solana and XRP did it in freaking 13 days and 30 days. That's insane.
That is insane. And they're talking about, what are they talking about exactly? Like TVL or
they're talking about futures. They're talking about
futures. Okay.
Yeah.
Okay.
So open interest in futures trading. So yeah, this is crazy, man. Crazy work right here. Just a couple of days ago, all this on stage. For the record, by the way, who are we listening to? I forgot to say that. So we have the VP Global Head of Derivative Sales at Coinbase. We have Joshua Lim, co-head of markets at Falcon X, and we have Giovanni Fiscisco, Global Head of Cryptocurrency Products at CME Group. Huge right there. Yeah. Michael Higgins is the international CEO of Hidden Road. So big names on the stage, right? People that you should probably be paying attention to, not these retail investors that give you their empty-minded opinions. These are the people that are actually behind the scenes in the wits with financial institutions, knowing what's going on. The second thing that I wrote down is when this gentleman here says that the collateral that institutions will post using digital assets will dwarf today's posted collateral, which me and you, we've always said this, like DeFi is one of the most underrated spaces in crypto because it actually provides real world utility, but nobody wants to pay attention to it. It's like,
yeah. And what he had said, I forget who said it, it was like towards the end when we were listening to the end of this podcast or this, what would you call this actually?
A panel discussion.
Panel discussion, right? Yeah. He had said TradFi will be basically in the same category with DeFi, and you're going to be able to pair up TradFi with DeFi and digital assets. So I'm thinking of that like, damn, so are we going to see liquidity pools like, XRP and Tesla stock liquidity pool, XRP 100%. And Apple stock liquidity pool?
100%.
Like,
bro, 100%. And anybody that is fading DeFi right now is soon to be mind blown at how it becomes very quickly almost like a prerequisite for like crypto holders. Like if you're not using crypto for DeFi related things, it's like, why are you even holding the asset? It's going to become like that in the near future. Like one of your assets, at least at a minimum, should be doing something for you being put to work. Crazy times. I want to listen to this clip where he says how the collateral, I'm pretty sure he said this, the collateral that's being posted right now in digital assets compared to what's coming is going to be dwarfed.
Agreement, how you get access under certain situations. So that's just like general type of collateral. In terms of like what collateral we're getting, a lot of people still want to trade the Bitcoin basis trade. Bitcoin is a non-carry asset. And so being able to post that as good collateral and have somebody like Hidden Road finance dollars to perhaps run a Bitcoin basis trade where I think we're still the only FCM that takes Bitcoin and will finance dollars to cover span margining. In that setup, you need to understand not only and model the basis risk, but understand what that Bitcoin as collateral is. Playing on that, it's XRP, it's Solana. Moreover, you're starting to see that in securities. Everybody's been buying ETFs, and now you have security law interest introduced, but they're long ETFs, short front month CME future. Again, the liquidity side is really important. Josh briefly mentioned it, but I think it's really important that as large institutions come into this space, the quantums of collateral that they post will dwarf where we are now. It is critical that you have assets that pay positive carry for that, and those need to be digital. And so this is certainly...
It's imperative that you have assets that are positive carry assets. That means they generate yield, y'all.
Yeah.
Okay. And he said the collateral that's being posted now is going to get dwarfed compared to what these institutions are about to put on. I've been telling, I swear, we have been telling people that these institutions are not going to sell their crypto.
And this is just more, we got to make a huge compilation of people saying the most bullish shit that's happening right now in real time. It's going to dwarf. That's wild to me. Like, what type of money are you talking about? Quadrillions?
Well, listen to what they say next, because here, this dude from, I think he's the guy from Coinbase, says we can't even fathom how much capital is about to come. Check this out.
God damn.
Man, maybe we can start with you here.
Sure. I think a year or two ago, there was concern that with the launch of ETFs, we're going to have bifurcated liquidity, where as IBIT and other providers grow, those assets stay in TradFi and can't flow down into crypto. I think we've seen some of that shift, and DATs have really helped, where the managers of the DATs essentially have to do something with the assets that they purchase. And that activity is flowing down into the crypto economy, whether it be via DeFi, lending, or going further down the stack of crypto assets. So I think we're definitely going to see some spillover. I think we already have. I just think that it's going to be a multi-step process. But ultimately, as Mike and Josh and Giovanni have said, that once we unlock institutional capital, I think we don't really fathom just how big the institutional capital is, or the TradFi capital coming into crypto.
Go ahead, bro.
The floodgates have opened, baby. The dam is
broken.
Get in. The water's warm, baby. The water's warm.
Dip your toes in. The water's warm. DTCC, man. If you've been on these Friday podcasts with us, we are nailing it on the head week after week. Wow. What a
literally
sync, man. It's so crazy. That one's wild. All right. Next one, this dude said professional investors are seeking yield, which just goes hand in hand with what the gentleman from Hidden Road said, that, the digital assets that they're going to need to have after posting their assets as collateral on the opposite side are going to need to be positive carry assets. So they can post a negative carry asset like Bitcoin, even though Bitcoin's becoming a positive carry asset with DeFi now. But before, and just like XRP, it was an asset that didn't produce any yield. So you can post your XRP or your Bitcoin, a non-yielding asset, as collateral, and in return, you can get stable coins, or you can get, whatever you can get against it, whatever you borrow against it. In some cases, it could be more crypto. In some cases, it could be stable coins. And then because, you lent out your asset, it's now earning yield, turns into a positive carry asset, while on the same time, your borrowed asset can also be generating you passive rewards. That's the future we're headed into. And you just got confirmation from freaking Hidden Road, y'all, saying that this is happening.
Yeah. Very important people on this stage. These are not just regular Joes.
Well, 28. We've been telling people this for over almost 2 years now, going on 2 years.
Literally.
All right. Professional investors seeking yield. Let's listen to this one. This is 13 minutes, 24 seconds.
FalconX have been as a facilitator, execution partner, custody and staking partner for a lot of these treasuries. And I think it does mark like a very significant milestone for our asset class, that these assets that had previously been pretty dispersed across a lot of early adopters, high net worth people, retail holders are now being reconcentrated and sort of accessible to a lot of the folks in the institutional category like us in these sort of vehicles that are professionally managed. So it does really change like the character of the industry and how these assets are getting deployed. For us, it's important because we're then now talking to investors, professional investors that are very familiar with derivative strategies, generating yield. They can properly assess the risk reward of deploying assets into a protocol, for instance. You have very savvy investors like Kyle Samani and the Solana DAT, who has already come out and said that they're going to deploy a lot of the Solana assets in yield-bearing strategies on chain in the Solana ecosystem. So it's a huge milestone.
I fucking love it when you smile at the videos I play, bro, because I know our mind is already thinking the same. Man.
But he just told us, bro. Like, I don't know. It's already, he's telling us in layman's terms. He's like, yeah, they already said that they're going to be deploying their Solana to be earning yield. Like,
we're talking to these sophisticated institutional investors, and they're going to want to be generating yield on these protocols. Hello, wake up, people. Y'all, come on now. I'm motivated this Friday to get people's brain juices flowing. Stop focusing on price predictions. Your digital assets have so much more utility than being sold for dead fiat currencies.
So real, bro. So real. Like, well, somebody's asking about the price of XPR by end of year. It doesn't matter because we're earning yield.
You don't even need it. You don't need it to be at a high price because guess what? If XPR or XRP or HBAR or Bitcoin or whatever asset floats your boat goes to some high price, you don't have to sell it. You can lend it out, post it as collateral, borrow stablecoins against it, and then go spend your stablecoins. Go do what you want to do with your stablecoins while you still have access to more upside potential with your crypto. I use this same analogy all the time. Imagine you were the guy that bought Bitcoin for 10,000 Bitcoin for one pizza or whatever back in the day, right? Would you have been better off if he would have held that Bitcoin? Let's say he would have held it. Would he have been better off selling Bitcoin at $30,000 per Bitcoin, trying to time the market and get back in with those profits? Or would he have been better off posting that Bitcoin when it was worth $30,000 as collateral, lending it out, borrowing against it, using that borrowed money to enter back into the market when the market dipped while still holding on to his main position of that Bitcoin, and then rode Bitcoin all the way up to $100,000, doubling his or tripling his bag?
Facts. But he only had one part of the story of crypto. He didn't have the full picture.
That's exactly what's about to happen with everybody right now that thinks that they're going to sell their crypto this next cycle as if they're some trader. Yeah. When you're not, you're an investor. You're an investor. Most people listening to this are investors. You do not have trading credentials, meaning you've sophisticatedly managed a 7-figure portfolio for more than, let's say, 6 months minimum successfully. Most people have not done that. So you're an investor.
Yeah.
And a lot of people, bro, are going to fumble this ball trying to be traders.
They're going to fumble the bag big time. And I'm just thinking of what Nadine said. It's going to be impossible to catch up. So if you exit the market and you have an exit plan and you successfully do it, well, like, you don't know what the future of this really holds, because this is there is so much liquidity in the world. Like, DeFi is going to be able to keep you in these assets so that you could take advantage of wherever the price goes. You know what I mean? If you exit, your story is going to turn into, once upon a time, I owned this asset. Yeah, I sold it at $30 and now it's sitting at 1,000 or 10,000 or whatever the price goes to, right? So that's the reason why that exit plan can be very, very lethal to your bottom line. And at the moment, but go ahead. I'm saying too much.
No, you're saying amazing things. And it's just the fact is that the reason why all these people in their heads have an exit plan is because 98% of influencers right now in the current market environment are generating content to stimulate dopamine and give you all entertainment instead of actually being 7-figure investors, right? The question who you watch, do they actually have 7 figures invested. They're trying to teach you guys how to become millionaires. Are they millionaires? Right? Are they millionaires themselves?
Facts, bro. Are they a
You wouldn't-
millionaire themselves?
You wouldn't learn basketball from somebody who isn't a professional basketball teacher or somebody who has 13 years of successful basketball track record history, right? Why would you listen to some retail investor that's been on the internet, was able to accumulate 100,000 followers on YouTube, telling everybody that they're going to become millionaires, but has never actually achieved millionaire status? It makes no sense. That's the world we live in right now. And a lot of people are going to get wrecked because of it. Whereas instead, inside the CyberX community, you have 5 different freaking mentors. One has only achieved multiple 6-figure status, but all the rest of them, including myself and you, have achieved 7-figure status.
1.5% club, bro. And
And
maintaining, not
Oh,
being
bro.
immature, not going out here doing wild ass shit. Like, oh, let me just, you know what I mean? You give that type of money to somebody else and they're going to start living differently and they're going to be immature with that type of portfolio. It's not going to last long.
I don't know if it's because I want other people to win or I just have faith in the human population or what it is, bro, but it just doesn't sit well with me that so many people are about to miss out on so much wealth because they're following just the wrong people. And it's like, I don't know, man, I can't sleep at night sometimes because I'm like, fuck, man, people are getting wrecked with these. Dude, there should be regulations. I'm going to go out right and say this. There should be regulations. And if I ever become, like, let's say XRP goes to $1,000 one day and I have, 50 billion freaking dollars, I'm going to make it my goal to figure out how to regulate who creates content in crypto, because there needs to be regulations around who creates content on crypto. Imagine an entire year of your life without bullish, hypey price predictions, what you could accomplish.
So much. People distract themselves with those dopamine hits. It's unfortunate, but that's just where it is right now. But I get upset too, because it's like these people, they follow blindly and they don't necessarily cross their T's and dot their I's. So when somebody says Metallicus is a meme coin ecosystem, they believe that garbage. And anybody with a logical mind that does a tiny bit of research and looks into this ecosystem is immediately going to say this is not no meme coin ecosystem. But people don't pull these content creators cards. They really don't. They just follow blindly and then they agree with this shit. Hip hip hooray. All this just like validation garbage. It's garbage.
I try to accumulate my opinions based off of what the people that actually matter in this space say. And so this is the co-founder of Tether. We've played this video before, but he talks about this lack of people's ability to really understand their own, limits. And like a lot of people are going to mistime the market thinking that they're traders when they're not. And they'd actually probably be better off as just staying an investor, right? And this, I'm going to show you guys, like, just look at the current landscape today. So I want to play this video clip and I want to seriously ask you guys watching a question to just get the brain juices flowing and really make some serious mental restructuring as we head into 2026. All right. So listen to what this dude says. By the way, I'm just going to go out right and assume I haven't looked up this guy's net worth, but he's the co-founder of Tether. So I'm going to assume his net worth is probably more than like 50 mil minimum, right? I mean, probably way more than that. I'm just putting that as a minimum. So he's probably just, I'd listen to what the heck he has to say because he can manage money pretty well and is a co-founder of one of the biggest, if not the best performing business in all of history, right? So listen to what this dude says.
Or whatever. If I had that minimal exposure, I would not pay that much attention. If I had to ride through a downturn for a couple of years, I'd say whatever. And the reason is this: the greatest risk when you are involved in a investment that has a very long trajectory, but that's got volatility along the way, the greatest risk you have is that you exit and you never get back in. And that risk is so great, in my experience. I've never exited. I just have held my crypto. Could I have done amazing if I had sold at the lows and, or sold at the highs, bought back at the lows? Of course, but I never knew what the lows were. and I never knew what the highs were. So when people talk to me, as they do all the time, and they say, it gets kind of annoying sometimes too. Oh, Bitcoin dropped 10, 15%. Should I sell? It's like, well, yes, if you literally are going to miss your rent because you needed that money, but you shouldn't have had that in there if you were in that situation.
All right, check this out. So first off,
Bro, don't listen to us. There's a co-founder of Tether. He's saying don't exit.
I think people really need to understand that these influencers that are creating content to this day, what they do is they latch on to understanding that the vast majority of people, meaning again, a large percent of the population, are suffering financially. So they gravitate their attention towards lynching onto your want to become wealthy. And they pump in your head that if you do what they do, which is sell, like they can do it successfully, which they most likely can't. They're manipulating you to believe that because they're good at creating entertainment, right? That you're going to be able to do it successfully as well. That is a false, fake person. Like, you can't think that way. If you don't have a track record of doing it successfully over a year long, successfully buying and selling and buying and selling and buying and selling and re-implementing capital at the bottom and then putting it out at the top, If you haven't done that successfully, what makes you think that you're going to be able to do it in the future successfully, right? I'm not discrediting people's abilities. I know that there are people that can do it because I've built a community over the past 5 years of a team of successful people that can do it, right? But you watching this as the normal 9-to-5 worker who's at your job probably isn't going to be able to run over to a computer if the market's crashing, sell your entire position, and then be in the right moment at the right time at your computer to re-implement all that capital to get more coins. It's not, hello, you guys see what I'm saying?
Yeah. And ultimately, it's like most people, they want, like, their mind says, I want to get rich. I want to get rich. And they think by getting rich, they're going to be able to retire as well, which is really not the case because you really got to get that you got to get that liquidity working for you. But if you just flip your mindset to understanding DeFi, understanding that these digital assets can make you cash flow, you can actually create a whole new plan. Fuck an exit plan. Create a retirement
plan. Create a retirement plan, not an exit plan. Yo, you could not have said that any louder. So y'all, everybody listening to this, just think about the current landscape. Ask yourself some questions. Do you know what the local top was? Do you know why the market from October 6th until now has shed over $300 billion? Do you know when the market's going to turn around? Do you even understand why this happened? Let alone, did you sell at the local top? Did you sell at $4.23 trillion, which is the local top? If you did, pat yourself on the back. You're one of thousands, because most likely, if you're listening to this, you didn't. You didn't. Let's just be honest. You did not sell the local top. If you bought into the rally that we've recently seen, which was above $4 trillion, if you've bought in any crypto when we were above $4 trillion, most likely that position is now in the red, right? So again, proving my thesis is that most people in crypto cannot do this properly. Now, I'm not going to try to shill you guys CypherX, but we do it properly here in this community. Here's timestamps. We are a community with timestamps. We have timestamps to prove everything. We have valid credentials. We have portfolios that we can share to our private community to show that this is all happening in real time. Here's a video from October 6th, private community Zoom call 2025. I actually asked everybody on the Zoom call to type me out a list as a community. Everybody, it was like 70 of us on a Zoom call. We typed out a list of fundamentals that could shape the market and make a pullback where instead of popping above $4 trillion, we actually pull back below $4 trillion. Take a second here and listen, just so you guys as our audience can hear this. That's not in the private community. This is what we talked about days ago. So any renewed escalation that brings back the geopolitical risk premium. And if we see any prolonged US government shutdown or any type of data releases that create any type of uncertainty or spark investor, or dampen investor confidence, that push back on this rate cut narrative, while at the same time we see buyers trapping or sellers trapping buyers and becoming aggressive, pushing price back below the delta, then we know the likelihood is not that we're going to break higher into new territory to respect the sell delta, but instead we're likely to start making our way back down in the form of a pullback to see if buyers can then come and defend at the buy delta. Look at this analysis, y'all, from October 6th, okay, that we did as a community. I wasn't the one that typed out this list. Our community did, because they're educated. And if we come over to the crypto market today, this is exactly what's panning out because of the environment that has been recently created this week. If you don't know about that, head over to my Twitter and read, right? Knowledge is your friend. Knowledge is powerful in this new day and age, and not entertainment. Entertainment, just like fiat currency, is something that you should start to shy away from. You should start to push it out of your life very slowly. It's going to take some time and readjustment, right? But it's necessary for your survival. So if you don't understand why the market's down, what global uncertainties hit the markets this rising and created a sell-off in equities, created a sell-off in stocks, created a sell-off in crypto, go be a part of a community. I'm not saying our community is the only one out there, because it's not. It's one of the many out there that actually properly educate our community on what's happening. We warned about all of these things a couple days ago before the market pulled back. Now, fast forward to today, this is everything that's happening. I wrote a full entire report. Global market uncertainty, tariff escalations. We had geopolitical uncertainty over in France. We had the government shutdown in the United States continuing to prolong. We've had hawkish Fed speakers pushing back on the recent rate cut trajectory. These are all things that weigh on risk sentiment. It's not underlying crypto fundamentals. It's just the fact that crypto is heavily tied to risk sentiment. And right now we're seeing an intraday risk off mood. But the underlying fundamentals in crypto are super freaking bullish. And so as soon as these headwinds dissipate and they're put in the rearview mirror, we are going to see so much capital flood into crypto, which gets us back to this panel discussion here. And you need to be prepared for that. So what's the best way, in our opinion, to prepare for that? Buckle down, learn how to stack yield on your digital assets, accumulate more assets now while the market is going through this very volatile phase where we might see $1 trillion pullback. Does that mean the market's dead? No. It just means temporarily the market was risk off and a lot of large investors that were overly exposed shed their positions. Guarantee you the market finds a floor and supersedes $4.1 trillion. I actually, as a matter of fact, would put my entire 7-figure portfolio on that bet that within the next 2 years, we'll be above $4.1 trillion, hands down. And you don't want to be on the wrong side of that wave because you thought you were going to be a trader or this, and that, something that you weren't because you were manipulated by these investors on the internet that create entertainment.
Facts, bro. Didn't you say too the next delta up was like 4.8 or something like that?
Yeah, then our next institutional sell delta gathered by our software, our in-house software, doesn't show itself until $4.8 trillion. So if we do end up breaking 4.23 trillion and we see some good buy volume, yeah, bro, that opens the door for 4.8 before we see sell pressure again. Yeah, so I love having those insights because it's like, dude, as soon as we saw on the freaking Sierra charts, as soon as we saw sellers take over at the delta zone at 4.23 trillion, I was like, oh, she's going to dump. She's going to dump.
It hits every time. Those deltas they don't cap, bro. They hit
don't miss,
consistently.
They don't miss. Dude, you know what's so crazy is our in-house institutional scalper was just talking to, if I'm not mistaken, large hedge funds about the software that, we provide. It's crazy.
That's dope.
Yeah, it's pretty crazy, man, what's happening behind the scenes. More people will wake up, but slowly and surely. All right, back to this before we move on. So another thing that I wrote down was the dude pretty much said that we're going to be able in the future, or at least institutions, are going to be able in the future to expand their access to the 100 to 250 different digital assets, which is, I just feel like huge for everybody watching. And we should listen to it again because a lot of us are still in this mentality that there's only going to be, 5 digital assets or 10 digital assets that survive in the future. And I think we're past that as a reality, but more people need to come to that understanding. Hey, look, institutions are broadening their access. This gives us a little bit more wiggle room as well to feel more confident having a broader portfolio. I'm not telling you guys to go out there and wing it in meme coins by any means, but I feel like a lot of us have a diversified portfolio in the top, maybe like 200 coins. And so hearing this just gives me like, you know, all the butterflies that I had that it's only going to be the top 10 kind of are starting to go away. So listen to this so we can confirm that together.
Like the large statistical ARB guys that were pretty famous in small cap, mid cap equities, applying similar strategies and techniques into digital assets. And they're trading across a surface of coins that's 150 to 200 names and getting sufficient liquidity off. And so I think that's the growing market. Not everybody's delta neutral, they're stat ARB-ish. And so for us, that's an exciting development. And I think those types of institutions can deploy material capital. As for new coins coming up without a perk market, super limited. So exciting times, but still heavy concentration in the main products.
So we said for now, heavy concentration in the main products, but they're expanding their access to trade the top 100 to 250 coins, which is a pretty broad list.
I mean, it makes sense too, because when you really look at it, they all do different things. So, and like we've been hearing, there's not going to be just one winner. There's going to be many ecosystems, and that's why they've always talked about interoperability as well. So this is music to my ears as well, because some of the assets that I have in my portfolio are actually like, I think past 50, past 100. But I have really high conviction in them, so it don't matter where it's at.
Yeah, same. I have a couple of those assets in my portfolio that I think will slowly wiggle their way into top spots because of the utility that they provide and who they're partnered with in the moment, which the market, for some odd reason, hasn't yet seemed to catch on to.
I know, right?
Which I think will happen over the course of the next few months / years. The next thing to transition us over into the first part of our call today, or the second part of our call, excuse me, where we kind of give you guys a solution to this thesis behind, you know, maybe we sell a portion of our portfolio, because I'm not an advocate of telling people not to at least take their initial investment out of the market, which I think everybody should, right? To de-risk completely. Personally, I've already done that. If you haven't, consider it this next cycle. But I think that people would be more successful one-off in terms of life-changing wealth if they just stayed in this game for, you know, it might not be for life for most people. For me, it is, but at least for the next 5 to 10 years minimum before considering, you know, shedding some heavy weight off of your portfolio. And so what are you going to do until then? Well, the best strategy would be to participate in low-risk DeFi yielding strategies. And so I want to show you guys that just now, recently on stage, a couple of days ago, they said pretty much that banks are going to be able to use DeFi protocols. Check this out. Listen to this.
Directly touched on in maybe like the Genius Act or any of the kind of, other thing that's kind of interesting is there's a lot of spillover effects into DeFi world, right? So if you think about the growth of Hyperliquid, even though it's not directly touched on in maybe like the Genius Act or any of the kind of regulatory frameworks thus far, the reason that there is so much volume there, I think, is because regulated firms in the U.S., prop trading firms, high frequency trading shops are emboldened to basically participate in these venues. It's easier to get through risk and compliance committees to deploy on this, given the just favorable backdrop generally, and the fact that like it's less likely for you to get prosecuted down the line for participating in these things, because there's a more kind of forward-thinking approach to innovative platforms.
I just think that what Mike said is super important.
Right. So he's pretty much saying that the regulatory environment has shifted and that these banks and institutions have an environment now where they can participate without feeling like they're going to get pinched down the road for not being regulatory compliant or whatever the case may be. That is a huge shift in terms of sentiment compared to where we were at just a year ago. Right.
Yeah, facts. Just curious to know if like BSA compliance plays a role with who he's referring to.
Yeah, I wonder. The last clip that I'll play from this is where the gentleman from Hidden Road stresses on something that Aqua and myself have talked about in previous podcasts. It's this notion that we're headed into a future, and I guarantee, I'd say probably 5 years minimum before your business, if you work for one, you have a 9 to 5 job, starts implementing this. Within 5 years, I'd predict this. Within 5 years, we're headed into a future, a wallet-based system where you're going to have the ability to probably get your paycheck. If you're getting paid once a month, it's probably going to turn into bi-weekly for you. If you're getting paid bi-weekly, so once every 2 weeks or once a week, it's probably going to get turned into every single day type thing. And what people do with that income every day, it's not that your income is going to change, but the frequency in which you get your income is going to change. And so you're going to be able to move your money around at such a faster, more efficient pace. It's going to be paramount for you to learn how to generate yield because you're getting income every single day. You can make passive rewards on that income every single day, and you can start to pay off your bills and your debt and live a more comfortable lifestyle. And so this isn't about making a whole bunch of money and freaking, oh, this lottery fixed mindset. No, this is a mindset about survivability, longevity, comfortability, and really just changing the old money habits that you had being stuck in the traditional financial system and revamping your educational and strategical approach into this new digital landscape to be able to survive and thrive, right? So if you don't know how, like say, for example, you do get paid bi-weekly, and if your business was to send out a letter or a notification saying, hey, we're changing our account-based system over to a wallet-based system, download this wallet. Once you've downloaded this wallet, you're going to start receiving if you make, I don't know, $1,500 every 2 weeks or something, dumb that down by 14 days, and you're going to get that much money every single day, right? Instead of every 2 weeks. What are you going to do with that income, right? For a lot of people, they're going to fumble the ball getting paid that frequent. They're going to spend it more often. You, however, because you shift your mindset, are going to earn more frequently, right? And it's going to change everything for a lot of people. But so many people, because they're not digitally literate, they're not financially literate, and they're ignoring this change because they're so fixated on price appreciation, and not all the infrastructure that's going to lead to price appreciation. They're going to fumble that ball. They're going to fumble it real bad, man.
Yeah, they are. Man, DeFi is going to help the people that start understanding DeFi early. It's going to help so many people catapult ahead. It really is. Like, I was just thinking about a scenario like, you have an 18-year-old child and he has a job, but he doesn't necessarily need the job because his parents can pay for, all of his expenses still. But for him to get on his feet, he can go and get a job, and all that income coming in, instead of blowing it, put it into a DeFi portfolio that starts paying him passive income. He can live with mom and dad till 22, 23 years old. And by that time, he'll have possibly, 30, 40, 50K of passive income coming in. That's game changing.
Yeah, bro. Just like Christine Moy from Apollo said, that they're building for a future where people retire off of just their savings alone. Just their savings. That's crazy work. If you have, let's say, $100,000 to $200,000 in savings over your lifetime, you're in your 40s or 50s, or even in some people's cases, they don't save that much until they're in their 60s. Guess what? That's just your savings. That's not your investment portfolio or anything. You can put that into a 10% yielding portfolio in DeFi and make $20,000 a year. And then if you divide that by 12, that's what, $1,200 a month. For most people, that covers your living expenses. That's retirement right there. Having the ability to cover your living expenses with your income, right? And still have a little bit extra money left over to live a comfortable lifestyle, to go out to eat, blah, 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 whatever, right? That's coming. And if you're not prepared for that transition, where again, we've lived in this traditional financial world, all of us, everybody listening to this has been in an account-based system for all of our lives. Now we're moving away into a digital world, a wallet-based system. And if you're not mentally ready for that, because again, back to our previous spiel, you're focused on just entertainment, level up, mature, get right. Crypto is not just about making money. It's about a lifestyle change, a revamp, and our sovereignty and our access to the financial ecosystem, y'all. Like, this is seriously a moment in time where if you don't get right, it's going to show in 5-10 years. It's going to show.
Yeah, it really is. Because at that moment, that's when AI, robots are going to start really peaking and taking over different positions, and the job market is going to, continue to decline. And, you know, the ones that are on that side are, it's going to show, like you're saying, it's going to show you weren't paying attention. You were tapped into other things that didn't pay you back anything after 5 years. That Netflix TV show did nothing for you. You know what I mean? Like,
Yeah.
so
I mean, we could get into the wits, bro. A lot of people, though, unfortunately, are going to be on universal basic income handouts. And even though I agree to an extent that AI is going to create a lot of jobs, it is going to also replace a lot of jobs. And the amount of jobs that it's going to replace, those people that whose jobs it replace, there's going to be openings up for new jobs. But the question really comes down to, are you the type of person that's going to strive and thrive to go find those jobs? And in most people's cases, the answer is no. So the people that are working manual labor jobs or jobs that can be easily replaced by artificial intelligence, you really got to consider building for a future where it's going to be super hard with your current skill set. If you lack a degree, if, you know, the only tool you have in your toolbox has been manual labor your entire life, and you just watched a video of an AI robot doing the same thing, doesn't ever get sick, doesn't ever call out for work, never's late, sleeps at the freaking business, gets turned off at night, gets turned back on to continue the work the next day, you're out the window, buddy, right? And so if you're not building for a life where that's possible, I'm not saying it's gonna happen, but it's possible, so that you can live off of your savings and your passive income investments. If that were to happen to you, get right, because it's very possible that in the next 5 to 10 years, that's coming for a lot of people.
yeah, facts. I mean, and Elon Musk said that he's not going to stop until his robots can thread a needle. So if a robot can thread a needle, that tedious of a task, think about it. Like,
Bro, he just posted a video the other day of, I'm pretty sure I reposted it, of a freaking robot that he built doing full ass karate, yo.
oh, I seen that shit. Yeah.
Like, are you kidding me?
Fuck around and find out with a robot, bro.
Yeah, man. I mean, wow. Just like growing up and being in the era of the internet transformation and watching movies like iRobot and stuff, and then like now actually living through that reality is mad wild, bro.
Mad wild, bro. Mad wild. Yeah, I have to agree with you for sure.
All right, we got off topic. Back to DeFi. So this dude here, to end this spiel and end this token 249 Singapore, he talks about earning every day, which if you're part of the CyberX Wealth 28 Club, I'm pretty sure that in like our welcoming video, we talked on this, and we made a video about, we made the Wealth 28 Club videos a year and a half ago or something, right? So that just goes to show, if you've been tapped in with us in the Wealth 28 Club, this is what we've been talking about. It's going to mature. It's going to happen. There's nothing that any of us can do to stop it. It is inevitable. And so it would just behoove you all to move with the changing tide, to upgrade your education, to be cognizant of who you watch and who you pay attention to, and really just try to fixate on being self-sustaining, right? If you're watching influencers that aren't teaching you how to be self-sustaining and you're just getting dopamine hits from them, revamp your content consumption in 2026. Just try it. 3-6 months, try it. Try not to watch anybody on YouTube that gives you bullish price predictions that never come into fruition, and instead replace that with these panel discussions that we share in the CyberX private Discord of these bankers, of these institutions. It'll really start to make you wonder, how did Aqua and Cypress and Institutional Scalper and Kevin make 7 figures in the market? You think we'd just sit here and twiddle our thumbs? No, we tap into what the bankers are saying and we follow the money, and we make good investment decisions based off of what people with actual credentials say, and it shows in our results. And you guys can mirror those same results by locking in and blocking out the noise, right?
100% facts, brother. 100% facts.
Check this out.
Important. You can't go on Aave and transfer the ownership to somebody who's not KYC'd. So what's coming out today is effectively, swaps on these things in tokenized format. So there's a long way to go from a regulatory and a securities law that's very clearly defined. But I give a non-crypto kind of thing, right? And there's no reason payroll is every, twice a week twice a month in the U.S., but twice a week would be great. Twice a week in the U.S. and a month and once a month in the U.K., right? And so wouldn't it be interesting? I know my platform pays people hourly on the top of the hour. And so if you move to a world where you can start paying people hourly or daily What does that do, right? Is that interesting? I mean, maybe it's dangerous. Well, actually, the mortgage that you're paying and the interest that you're accruing on that, you can start to crush down the debt side of these things. And so it's not a crypto comment, it's the technology side of these things. And there's obviously, lots of challenges in doing those things. Maybe ADP is probably going to be after me for saying that, but this is readily available. And I always joke around and say, like anything of value, and that's Ripple's big thing, you're in the internet of value, tokenizing things and shipping that round for good collateral and settlement and finality to trades. We're kind of here. And so is Mike Higgins buying a cappuccino at Starbucks on a Saturday and selling my NVIDIA shares. Now, I'm not sure I want to sell my NVIDIA shares for a cappuccino, but the point being, it's for settlement. It's on a Sunday, and you could do that. And so we're not far from this type of advancements, but there's a
We're not far from these types of advancements. He even just said that his business is already doing it, paying by the hour.
Paying by the hour.
You
Man, that's really amazing, to be honest with you. I mean, and the people that take advantage of that correctly and don't blow that money, man, you can really get ahead getting paid by the hour if you really think about it, because you can put that money to work right away as opposed to waiting 2 weeks for it to arrive and then putting it to work. So
it is truly liberating. You feel like you go through like a liberation, like when you put your digital assets to work and you make your first dollar in DeFi. It's like, this whole time I've been waiting for price appreciation, when this whole time I could have been paying myself.
Bro, I remember this. We would not sleep when we were building out Wealth 28 Club. Like how excited we were. We probably slept an hour, 2 hours a day, and we were waking up, checking our computer. Like, is this still happening?
It was a miserable sacrifice for the greater good, bro. I remember those days being on calls, literally with you, like neglecting my freaking family and whatnot because we were on.
Facts, bro. It's paid off so much, though. It's
so much, dude, and it's really taught a lot of good people in our community like how powerful they can become as a sovereign citizen to just take back the power of banking in their hands. And it's like, it's really crazy, dude. I haven't even showed you, but I have a portfolio on my computer of over 400 reviews of just all of our community members that have said positive things over the time. And dude, some of them, like if I go back and read them sometimes on down days where like the internet and Twitter's being shit, I'll go and read them for some just motivation. And dude, some of the things that people have said to us in the past are like bring tears to my eyes, because we've helped a lot of people change their mindset from this whole, stuck in the matrix, never gonna make it out mindset. Dude, there's a dude. Don't we have a freaking police chief in our community?
We do. We do. We have all walks of life from all parts of the globe. And I have to say that myself too, especially when I would get on the Stairmaster, for whatever reason, when I get on the Stairmaster, it would just get me like super, just like, to that point of like super sweating and your mind is like trying to fight and or whatever. But then I would like start thinking of what we built and start thinking of like all the acknowledgement and the appreciation that we get from people. And yeah, it brings tears to my eyes too, because I'm just like, man, I'm really following my alignment with the universe. Like this is really what I'm supposed to be doing, what we're supposed to be doing to give these gems back to the ones that are willing to listen. You know what I mean? We can only lead them to the water. They got to drink the water, of course, but it feels good that we've, a lot of these people are drinking the water. So
yeah, and we're just getting started. Wait till we're the ones hosting a Metallicus conference in 2026.
Oh yeah, it's going down. So yeah, if you want to pull up, yeah, look out for that announcement soon, because that's going to be a turned up time. And yeah, I can't wait. So let's go.
All right. So because we're on the topic of DeFi, before we jump into Metallicus, I just want to show people listening, like this is exactly what the elites, and when I say elites, I mean the people that have their hand in global decision making, are having freaking Sunday brunch breakfast over, y'all. Like this is not some scam anymore. They're literally drinking mimosas and tweeting on their phone and writing notes in their notebooks about DeFi and how it's going to be the revamp of the financial infrastructure. So check this out. Shout out to the CyberX researchers always for this content, which can be found in our private Discord to keep people in the loop of what's happening in closed door meetings. This is from the UK Crypto Asset Business Council's LinkedIn profile. And here, this is just from a week ago. So relatively speaking, at the beginning of October, they posted this, and it says, our core message is simple. Clarity is key. With the right rules in place, DeFi can deliver liquid markets, i.e. repeat, DeFi can deliver liquid markets, collateralization, settlement, and governance, the infrastructure of the future. So what does this say to me? It says DeFi, the infrastructure of the future. You all see that right there, right? And who's involved in this? Check this out down here at the bottom. You can see who was at this roundtable. You have Department for Business and Trade. You have the Financial Conduct Authority, the HM Treasury. You have Department of Science, Innovation, Technology, National Crime Agency, the European Commission. You got Hedera. You got Ripple. You got frickin' Aave, Coinbase, Kraken. This is crazy work. This just goes to prove that these people are having literally croissants and frickin' mimosas talking about DeFi and closed door meetings with the elites. Okay?
I swear I want to be able to zoom in on that notepad too. I wish we could do that and see what that shit says.
Yeah, this dude's notebook. This dude's got some good handwriting right there. Yeah, for sure.
Organized too. You see separated shit.
Maybe I can plug it into AI and see if we can get some insights into that. But regardless, this is what our private communities tapped into. This is good stuff here. Okay, this is the type of research people should be fixating their attention on. So coming over here, this is what they talked about in the document that they recently released. All right. So if we come here, this is the DeFi strategic opportunity for the UK, September 2025, UK Crypto Asset Business Council. And right here, it goes on to say, DeFi should not be seen as a replacement to the current system or established players, but as an innovation that can give users, both institutional and retail, increased choice over how they interact with or provide services to financial markets through traditional Rails, DeFi infrastructure, or a combination of both. So I like the fact that this mentions, and the reason why I'm reading this highlight, it mentions both retail and institutions. And so now just showing you guys that what they're talking about in their documents is happening in real time. This is from October 3rd, 2025, and it reads, Solstice is a collection of yield-bearing products based on the USX stablecoin with over $1 billion staked through Solstice staking across Ethereum and Solana. The team is launching Yield Vault, a delta-neutral hedge fund strategy leveraging Lido ST Vaults that has been live and proven in the market for over 3 years. With ST Vaults, Solstice simplifies onboarding for institutions seeking access to staking rewards that may exceed those of traditional markets, delivered in a streamlined way. Likewise, it says here, Solstice ST Vaults give both retail users access to the same conservative yield-generating strategies that are typically reserved for accredited or large investors. So what they're talking about in their documents, why am I showing? Why is Cypher showing me this? Why is he saying it's what I should pay attention to? Because I just showed you guys how they're sitting at frickin' Sunday breakfast with mimosas and croissants, taking notes on DeFi and calling it the future of the financial infrastructure in a document that they posted just a couple days ago in September, where it says all of this is going to be available for retail and institutions in the near future. And I'm showing you live examples of how this is already happening, y'all. So that way you don't think I'm making this up. It's happening, right?
In real time, bro, it's happening, literally.
So go ahead.
I was just gonna say the sentiment is not, it's not, we're 3 to 5 years out anymore. It's here now, it's happening now. Things are moving. So don't get left behind,
Yeah, it's a good time to be alive, awake, and aware to the ongoing transformation. So that's my spiel on DeFi. Now let's move over to what just recently took place, because if you have not been paying attention, there have been some major things said by very important people in the financial markets. For example, Jerome Powell just recently said at the Community Bank Conference in Washington, D.C., he specifically said community banks play a vital role in the U.S. financial system. Now, a lot of people don't really know a lot about community banks that are in crypto because our focus is always on like these big banks, right? Like Morgan Stanley type things. For example, Morgan Stanley, this is probably a fundamental that you've seen like watcher guru or whale watcher post out. This is like the mainstream type flow of info. On Friday, Morgan Stanley told its financial advisors, that's today, by the way, the firm was broadening access to crypto investments to all clients and allowing such investments in any type of account, including retirement accounts, CNBC has learned. Starting October 15th, advisors will be able to pitch crypto funds to any client. Previously, the option was limited to those in aggressive risk tolerance and at least $1.5 million in assets who wanted crypto and taxable brokerage accounts. That's all changing on the 15th of October. So you've most likely seen those types of announcements. But what about community banks? What's happening amongst the credit unions and the smaller organizations with, $4 billion of AUM or under, right? So you're looking at the hundreds of millions to a couple $1 billion, right? What's happening with those institutions? Groundbreaking things. They are in the process of integrating crypto and blockchain into their core infrastructure as well. And large players in this space that go relatively unnoticed, like Metallicus, are leading the charge in onboarding these financial institutions, allowing and giving access, doorways even, to these financial institutions to build their own compliant stablecoin, to integrate blockchain into their core infrastructure, to service new wallets for their clients directly in the mobile banking app that they're already familiar and comfortable with trusted credit unions. This is all happening. And again, like Aqua said a second ago, anybody that's denying what's happening right now on the Metallicus front because they're biased towards one specific crypto, as if one crypto is going to rule them all. In today's call, we already proved that to be ignorance, right? From an institutional perspective, where the gentleman on stage said that these institutions are starting to broaden their access. They're not just looking at the top 10 cryptocurrencies. They're starting to go past 250 cryptocurrencies, right? So this should be a very big eye opener. Go ahead, Aqua. You're shaking your head.
Yeah, I was just going to say, yeah, I totally agree with you. Don't listen to the garbage out there. Look into it yourself because, there's certain individuals, I'm not going to name names, but they're calling some of these super compliant ecosystems meme coin ecosystems, which blows my mind. And it just sucks that some people believe that garbage. But yeah.
Can you pull up the gentleman just so that way we can show them their credentials? The gentleman, John Ungerland, the other gentleman from Deland that Metallicus did a interview with the other day. I don't remember his name. He's got a nice full beard. Just pull up their credentials so that way at the end of this, you can see who we're going to be listening to. But first, we're going to listen to Jerome Powell, right? Chair of the Federal Reserve. So this is just from October 9th, 2025. Listen to what he says here about community banks.
Good morning and welcome to the Federal Reserve Board. I'm sorry that I'm traveling today and could not be with you. Thank you to Vice Chair for Supervision, Mickey Bowman, for hosting this conference. Thank you also to all the board staff that made this event possible. Community banks play a vital role in the U.S. financial system because they have strong links to the people and businesses they serve. And
he just started that off by saying community banks play a strong role in the U.S. financial system because they have links to the people that they serve. Okay? That is a very powerful opening statement and should be an eye-opener to a lot of people listening. Like, hey, it's not just about TradFi. It's also about the community banks, the smaller banks. Who is partnering with those organizations? Well, in today's call, I'm going to show you guys that Metallicus is the one. Metallicus is one of the many service providers that they are choosing in order to integrate and introduce blockchain, DeFi, stablecoins to their clients. And that is undeniable, 110%. You will see that after today's call. So if we come over here, all right, this is a compilation that I made. We have another gentleman here, Secretary Scott Bessent, talking at this event, which you guys can go watch on YouTube, posted on the Federal Reserve website. If you choose to do so, the link for that is also in our private CyberX Discord, where you can listen to the full entire conference. It would behoove you guys to do so. But here are some of the remarks that Secretary Scott Bessent made, where he specifically said community banks will be laser focused on these new technologies. And so, Aqua, did you pull up the credentials for those two gentlemen?
Yeah, so I got John Ungerland. What was the other guy that you had said?
Was it John Ungerland both times? Did he used to have a beard and then he shaved it in the second interview?
I believe it is John Ungerland both times, because it was John Ungerland the first time with Marshall and then the second time with John Ainsworth.
Okay,
but I'm pretty sure it was John Ungerland. Yeah. Let me share my screen. I found his LinkedIn so you guys can see his LinkedIn accounts directly from LinkedIn, right? So he's the CIO at Deland LLC. CIO being, what is that? Chief Information Officer?
Yes. And can you just explain to the people briefly what Deland is?
So Deland basically is a credit union entity with 4,000 credit unions under its umbrella, basically, in a nutshell. So yeah.
Yeah, very simplistic, right? So this isn't just some guy. So right now, the reason why I wanted to share those credentials with you, so that way you know, you're listening to Jerome Powell talk about community banks. You're listening to Secretary Scott Bessent talk about community banks and how they're laser focused on these new technologies. And then you're going to listen to John Ungerlin, this CO, what is he? The CTO, what is he? CIO? CIO of Deland, again, who has access to 4,000 of these community banks, these credit unions under its umbrella, literally tell you guys that Metallicus is the one they are choosing to introduce these new technologies to these community banks. Listen to this slew of videos that I put together for you guys. Share my screen.
The community bankers are, and the owners, whether they're family-owned banks, whether the shareholders are usually in the vicinity. And I think that they will be laser focused on the new technologies.
And obviously, with regulatory developments and legislative movements, stablecoins are going to be an important part of the U.S. economy and the U.S. banking system. And so we thought it was really significant to find a partner that controlled their own destiny and had control of all the ingredients for offering a stablecoin to the credit union and banking market space. And we loved what Metallicus was doing on the stablecoin front and other with their blockchain and DEX capabilities. And we felt like they would be a great partner for us to help provide a doorway. And we loved what Metallicus was doing on the stablecoin front and other with their blockchain and DEX capabilities. And we felt like they would be a great partner for us to help provide a doorway of stablecoins and other services.
And I think that they will be laser focused on the new technologies.
We've been tracking this space of digital assets now for going on 10 years. You know, I in particular have been a student and passionate about this space for a long time. And as an organization, we've been building intellectual property and preparing for precisely this moment for quite a few years now. And so one thing that I would stress is, you know, what's energizing to us is that we're not a crypto startup firm, and we're not merely slinging, you know, outside wallets. We have worked inside the banking and payments and fintech space for a couple decades, and we have many hundreds of years of experience on our staff working inside the banking and fintech space. And what we've built is a bridge to allow traditional financial institutions to connect to these new worlds of DLT and decentralized money movement and storage. And we know stablecoins like the ones supported by Metallicus are going to be an important part of that doorway that folks will walk through in that world of digital assets. And, you know, with that being a $4 trillion market and growing, we think it's really important for financial institutions to stay plugged into money networks if they want to be in the money business. We see what's happening with stablecoins as very significant. You know, regulatory and legislative clarity came first in the stablecoin sector, and I believe is coming elsewhere with other assets. And we see stablecoins as the doorway through which everyone's going to have to walk into this broader world of digital assets. You know, a lot of these things like stablecoins and digital assets and Metallicus technology, these things have been around working flawlessly for years. These are definitely established technologies, and Metallicus technology, these things have been around working flawlessly for years.
The community bankers are, and the owners, whether they're family-owned banks, whether the shareholders are usually in the vicinity. And I think that they will be laser focused on the new technologies. And
these are definitely established technologies. And the reason that we built and have launched and have live the digital asset bridge and vault is that we know that financial institutions need to be able to treat consumer digital asset wealth across a number of, you know, legitimate tokens with large market caps and significant utilities. They need to be able to service that wealth as part of their consumer relationship and consumer profile right inside their existing business.
And just like with the credit card companies, I think that new payment rails will exist. And I think we have to make sure that it's open for everybody. JP Morgan, Bank of America may have their own stable coin, but I think it's very easy, and you'll hear, you have two great participants, that you will hear that for community bankers to join together, whether it's in some kind of a cooperative program, whether, but you can private label these under your own name.
I think the second point that Marshall's calling out about stablecoins is another very clear trend. Credit unions and local bankers need to be adopting and experimenting and preparing their own stablecoin offerings, because certainly if you just do basic AI searches, basic Google searches, you'll see that the larger financial institutions that would love to put local small institutions out of business have already built their own blockchain networks for faster, better, cheaper payments. And in the world of money data processing, of payments, of money movement, if your competitor can do something 1,000% cheaper than you, that's endgame. You're done. And what we know is that the large banks have already laid the foundations for their own stablecoin-based payment networks.
JP Morgan, Bank of America may have their own stablecoin.
And yeah, I'm sure they'll be happy to lease local financial institutions access to that at usurious rates. But the products like Metallicus and stablecoins and other global stablecoins out there is that these are open, decentralized technologies that credit unions and local financial institutions can use to their strategic advantage. And they don't have to be put out of business by or dependent upon or fleeced by these large banks and service providers anymore. They can take back control of payments. They can take back control of deposits. They can service digital wealth. They can generate revenues. Stable coins are a great initial doorway to walk through into that house of digital assets. We see it as an important part of any local FI strategy at this point.
But I think it's very easy, and you'll hear, you have two great participants, that you will hear that for community bankers to join together, whether it's in some kind of a cooperative program, whether, but you can private label these.
And that's why we wanted to pursue, and we're excited to announce this partnership with Metallicus.
So are we going to develop a new kind of crypto Christmas club? I like that.
That's an interesting idea. Yeah.
CCC, Crypto Christmas Club. and because I do think one of the great things about crypto is it's bringing young people into the markets, into the financial industry. And I think that community banks, they will be at the front line of providing that.
No, it's just been really great meeting credit unions. And when we introduce ourselves, they say, "Oh, we've heard of you. There was this meeting.
Who hasn't?
That they brought up." And I said, "Okay, what context?" So it's actually, it's very nice that, we're putting a lot of effort into educating credit unions, bringing them onto our platforms, telling them about different products and regulation. It's nice that they are sharing it amongst themselves.
For sure.
I think that community banks, they will be at the front line of providing that.
So much to unpack there. The three main things I want everybody to focus on is how many times they mentioned community banks, and that these community banks will need to be able to launch their own stablecoin. Even Scott Bessent freaking said that.
Facts.
And then Deland CEO just said they're choosing Metallicus as the one to be able to do this for community banks and credit unions. Then, last but not least, Scott Bessent said community banks are going to be at the front line of onboarding the younger generation. And then Irina Birkin just said, hey, when we're introducing ourselves to all these community banks, they already know us.
I just love the exact same language on both sides. Two different rooms. It must be a coincidence, right? But same exact language, the same exact language.
No, it's the farthest thing from a coincidence, bro. Check this out. I mean, we already know, but for those of you guys listening, just to show you guys, August 5th, and I also want to do a little bit of a not skeptical, but a little bit of a price prediction based off of numbers that they're giving us off of recent partnerships, okay? Just to blow everybody's mind. So this is August 5th, 2025. Metallicus, a leader in blockchain tech for financial institutions and a developer of the Metal blockchain, today announced a strategic partnership with Deland. What is this for? Next-gen credit union service organizations for keeping credit unions relevant to their core. This collaboration ensures credit unions and community banks can stay plugged into the future of money through seamless integrations of stablecoins, Bitcoin, and digital asset services. Stablecoins are the foundation of modern financial infrastructure, bringing speed, programmability, and transparency to institutions of all size, said Marshall Hayner, CEO of Metallicus. Through our partnership with DeLam, we are enabling credit unions and community banks to issue institutional branded stablecoins and launch compliant blockchain solutions. You heard what Scott Bessent said. He said that these traditional banks are already launching their own stablecoins. Community banks are going to need to do the same thing under their own branded name. That is word for word what Scott Bessent just said. And here is physical proof that Metallicus is providing that technology.
Yeah. And then to kind of piggyback what I had said earlier when you had asked me about DeLand, basically DeLand is like another Fiserv or a Jack Henry or a Temenos, but their clientele are these community banks and credit unions.
We're going to get into this because this was even more recent. Cornerstone, right? So check this one out. It says it right here. Because remember, Scott Bessent said that these community banks should be able to participate in pilot programs and sandboxes. Word for word, that's exactly what he said. Community banks should be able to participate in sandboxes to utilize these stablecoins in their own compliant and efficient manner. Well, here, Metallicus is stablecoin pilot, a controlled sandbox that lets institutions explore, test, and deploy custom branded stablecoins in a secure, compliant, forward environment. Cornerstone League represents more than 600 credit unions across 5 different states. And I'm going to show you guys the market cap of all of that combined, right? Because we found the documents in the private CyberX research community. So then down here, it mentions what this pilot program allows them to do. It allows these community banks and credit unions to build custom branded stablecoins issued in a secure environment and tailored to their institution's policies and controls. This is massive. And this is literally from October 9th, 2025. So a lot of people think about it. You have this uneducated retail herd that's like, oh, meme coins, scam. But think about what Arena Birkin said. She said that when she's walking around this massive credit union event that she just went to, where I think there was over 80, or was it 800? It was, how many credit unions were there?
I can't say. I don't recall.
It was at a minimum. It was at a minimum over 80. I remember the numbers 80. I don't remember. I think we touched on it last week. Regardless, she said that all these credit unions know them already, right? So you have a person on the internet bashing Metallicus, saying nobody knows about it because they lack ignorance. But then you have Arena Birkin literally telling you guys, hey, all these credit unions know us. So these credit unions know about Metallicus. Why don't you? Ask yourself that question, right? Most likely because people on the internet try to mislead you to believe that it's something that it's not, okay? So do your own research. Coming over here, we have just recently on the Metallicus website updated their Cornerstone partnership right here. So in the CyberX research team, I went over because of this announcement on their Twitter profile where it says that Cornerstone League represents more than 600 credit unions across 5 states. I just wanted to know how much money this was. So I went and I looked, and then the documents always show you guys the deeds, right? The details. So this is a Cornerstone document, says it right here. And it goes on to talk about the AUM, the assets under management that all of these organizations have. So here's the total number of credit unions in the Cornerstone Credit Union Statistic Log, totaling 673 total credit unions. And down here, you can see the total assets that each of these credit unions has under management combined is 216 billion. Okay. So remember, I told you guys, forget for a second about, because we talked about Ripple at the beginning of this, and I admit, right, Ripple is 110% ahead of the league of Metallicus in TradFi partnerships. TradFi partnerships, that's like Bank of America, BNY Mellon, all these big names, right? But who is going to service the smaller banks? It's Metallicus, y'all. And these numbers are not anything to play around with, because when they come on chain, and they are, Metallicus is going to be at the forefront of gaining some of that market share. So let's play around with these numbers. And these are numbers, again, most retail investors that create content on the internet are speculating numbers out of fucking thin air for you guys. They're just making shit up. I'm showing you guys physical documents that this is a number that could come on chain. Why? Because Metallicus just partnered with them and now has access to 600 of these institutions. So let's just lowball this, okay? We could put $216 billion into the market cap of Metallicus and hype everybody up and say Metallicus is going to be $400 in the future. Buy it now, but I'm not going to do that. I'm going to lowball y'all to see the opportunity that exists. So let's just take 10 to $20 billion of this market cap of these 600 institutions who right now Metallicus is the only partner providing all of these services. Let's just say 10 to $20 billion comes over to the Metal blockchain. Look at these freaking numbers, y'all. Okay. So we come over here to Coin Perspective, right? And we just put in 10 billion. That's a 52x on Metal Token right now. And we'll put Metal Token at a $19 valuation. That's just $10 billion out of this 200 billion that right now I just showed you guys for a fact Metallicus is partnered with these organizations. Okay. And these 600 credit unions, by the way, aren't the only credit unions that Metallicus has access to. Go look at the land. Go look at all the credit unions that they have access to, which is over 4,000.
And keep in mind, there's over 750 plus credit unions, FIs in the Banking Innovation Program right now. So with this 600 being added, and you're only focusing on this 600 and lowballing it, keep in mind, we're technically like at 1,400, 1,500 credit unions and FIs in this Banking Innovation Program. So yeah.
I'm lowballing it, bro. I'm lowballing it so that people can use their own imagination to be like, dang, he lowballed it. And that's what the numbers were at. I should probably go research on what the numbers are really going to be. Because if I'm being completely honest, they're going to be so much more than what I'm showing you all, in my personal opinion. So let's just up it to 20 billion for the sake of today's speculation, right? This is just 20 billion out of that current $200 billion. So that's 10%, right? Of the market share of these 600 institutions comes over to stablecoins and is running through, Metal technology, right? That puts us at a $39 Metal token. And the reason why I'm speculating on this is because while all of these partnerships are happening in real time, where now Metallicus is running a sandbox for 600 different institutions, partnering with the land that has access to 4,000 institutions, and they're the only one, first of its kind, capabilities to provide these institutions with the ability to build in-house compliant stablecoins, right? And at the same time, they're saying things like this: every credit union, every bank, every fintech, every institution will have a branded, regulated stablecoin connected through Metal blockchain on their own private subnets, attested with digital identity and interacting in a compliant environment with blue chip crypto assets. Drops the mic. I'll let you guys go run the numbers yourself, but I showed you physical documented proof that these numbers are 110% possible. This isn't like some $1,000 XRP price prediction out of fucking thin air and theories because people want to make it up. No, this is documented proof of things that are happening right now that a lot of people are ignoring because people are trying to distract them.
100%. And Metal blockchain made history. They minted the very first stablecoin for an FI, St. Cloud Credit Union out of Minnesota. We touched on it a few weeks ago when it happened, So
that's my spiel for Metal blockchain. That's my spiel for today. I think we've done enough. I feel like this call was super powerful for those paying attention and those locked in and those willing to just expand your way of thinking. I'm not sitting here saying that I'm right or that I'm the know-all, be-all, or that my strategies and the things that we discussed on today's call are the only thing that are going to make people successful by any means. I'm willing to step off of my ego and admit that, right? There's many things in this world, in these financial markets, that I don't know. But the difference between myself and all these other influencers and Aqua and all these other influencers, we are willing to learn and put our ego and our opinions aside to really see what could possibly happen with other technologies and other institutions and really broaden our access to yield generation and DeFi, and not just marry biases because we're opinionated on a specific project or this, and that. Look at our portfolios, see how many assets we have in them that have performed relatively well because we've done the research. There's still videos that are lingering on the internet when me, Aqua, and our DeFi mentor, Kev, were talking about soy when it was trading at like 48 cents.
Yeah, 100%. We called that shit. Yep. Called loan at 6 zeros. So, yeah.
There's documented proof for everything that we're saying to you guys. I hope that you all enjoyed this call. I hope that you can hear the realness in our voices and, you know, the energy that I'm trying to provide from my heart to yours to really just better yourselves as not only a sovereign individual, but just as a person that's operating in this space. Don't let your brain, your power be manipulated by these people that act like they know what the heck they're doing on the internet because they're good at making entertaining content. Really push past that this year heading into 2026. Try to really restructure who you listen to, the content that you accumulate, and the strategical approach that you take to becoming whatever it is you want to become, a thousandaire, a millionaire, a billionaire, right? If you're not that already and you're not aggressively moving towards that goal, ask yourself why. Right? It's most likely because of the content that you're consuming, the daily actions that you partake in, which all of these things can be restructured and revamped to push you along a lot faster than what you're currently going through. So blessings to you guys. That's my message from my heart to yours today. Aqua, if you have anything, speak now, bro.
Yeah, no, I'm good. Yeah, I think you did an amazing job. That John Ungerland and Scott Bessent video compilation, how you kept on going back and forth, I felt like was perfect. Couldn't get any better than that. So yeah,
I think that's going to be one of those videos, bro, that we look back and it's going to have some good historical context. Like, you remember like 2 years ago when we were telling everybody, playing these videos for everybody, and now look, you know, now look. Somebody had asked how to reach out to us, how to get in contact with our private community. So here it is real fast. You guys can always head over to cyberxtrading.com. Lots of different options for you guys to be a part of our private community. So you choose to take that route further in your education. It's not for everybody. Some people just like the free stuff. If you guys do just like the free stuff, you can always head over to our YouTube channels. We're posting videos every single day. Both of our Twitter pages always have sophisticated, mature content on it. No hopium, no hype. Really just trying to educate the masses. If you guys want to dive a little bit deeper, you want to tap into our private community, you want to learn our DeFi strategies, how we're exposing ourselves and thousands of dollars into the DeFi market now to generate passive income, you can always head over to 28 Club, the wealth28club.com, or excuse me, Wealth28 Club, cyberxtrading.com to tap in. And then if you guys want access to our research, hundreds of hours of global research, pretty much all the stuff that you saw today on steroids, the documents nobody wants to read, but always should, the panel discussions that everybody should watch, but never does. Always, you know, our CyberX research team dropping some of the realest gems on the internet. Head over to the CyberX Discord and lock in with us. Outside of that, blessings to you guys. We'll see you all on next Friday's call. Everybody take it easy and have a good, productive weekend.
Much love, everybody. Peace.